Hey guys, it's Will. I'm going to go through the markets as usual, and I'm going to talk about a few sectors that are doing pretty well. Most of them aren't doing very well, and a couple other things that I do with TC2000 software for scans. I'll show you my current scan that I'm using. If you want to get a free trial of TC2000, which is the program I'm using here for the stock charts and the scans and the watch lists and alerts, check out the link in the description below. You can get a free trial or $25 off purchase. I've got the gold plan if you're membership and US real-time stock data. So thanks for everyone who's signed up for that, and it's a great program. I'm not shilling any stocks or ETFs at all, so that I remain unbiased in that sense. Because this is trading, there's not really emotional attachments to things. It's just looking at the chart. So, let's just look at the Nasdaq. So, before I do that, I just wanted to show you. This is my channel, and the videos I've got here. I've been showing some negativity for a while, so I feel vindicated, I guess, when I do things. That you're not predicting the future, but you're just sort of showing probabilities and what generally things are happening. So here, precious metals and commodities are surging, which they're still doing. Pulling back about a month ago. Pull back. Stock market's looking bad and volatile. Stock market bearishness. I don't just post negative videos. Market keeps dropping. So a number of stocks below 200 MA moving averages increasing. So I've been showing this for a while, so that's nice to see in a sense of what I was talking about. I like to be, hopefully helping people. But if we look at the Nasdaq, the reason when I saw the momentum dropping here, crossing down below, this is the price percent oscillator or MACD you can use. With price percent oscillator, kind of allows you to compare every ETF to each other. And the zero line is an important line. I'll talk about that hopefully a bit later in terms of the momentum. So I saw this decline here. It was a bit flat and then it broke down. And of course you're in a flat period. It's not like it's in a choppy sort of period. But then now we've seen it go and break down below the 50-day. This candle here, if you want to talk about candlesticks, this is a bearish engulfing candle. So it started up above and then it ended up below. So it engulfs the previous candle. And this candle is quite large. And now you're below the 50. So once you start breaking below averages, you can think, well, it's going to go down to the 200. But you also have little support points at this point, which were broken as well. So, it's tricky, but you can go back to previous low points. So here, this one's fairly low. You got the 200 and then you have this one. So people try to, there's potential for that to be a support point. But like up here, if you see here, if you draw a line at this recent peak here, you can see that it did support sort of, it broke a little bit below there. There's different lines you can draw, like you can draw uptrend lines. You broke that as well. So it's not in a good situation. Obviously people are selling tech because interest rates going up, and interest rates usually mean lower present value of tech stocks based on the future earnings brought back to the present. And so the other thing you're noticing is this breakdown below the zero line across of the momentum. So you can see that you're breaking below these moving averages, creating a downtrend. So now you have this, like, these are highs, these are lower highs. So here's a little bit of lower high and then another lower high. So that's in a downtrend. So that's probably the worst one. Then you have IWM. It's not very good either, but it's been in this long channel for quite some time. You can see that we're, let's see if I drew a line. Yeah. So there's a bunch of low points. So we're kind of close to that low. So it may bounce off there, but we're in this descending, or we're in this consolidating period. And also, like with the momentum being down below zero and crossing down, I'm not a big fan. So because of this, there's so much resistance, to get past all that. I'd probably want to wait, like see how it broke out here. It didn't really last very long, but that's where you'd want to look for a break. If I move the cursor 234, you'd want to see it at least get up above the 50. You can see the 50 days sloping down. What I like to do is look at periods where you had a really good uptrend and see what are the characteristics, and that is above the 50. It's also sometimes it's above other ones like the 21 EMA the whole time, as well as you're above zero and you're in an upward momentum. Now sometimes you have these crosses down and wiggles here, but you're way up high on the momentum, so it can still go up. So you don't just use this as soon as it crosses you sell, but this whole section you've had quite a large high momentum, and then once you're down in this lower range, you see how it it's not doing well. So it correlates kind of to where this is in the momentum line. So S&P 500, it's in a bit of trouble here, but it was doing fairly well for the most part. A few breaks here below the 50, but a little bit. See the red dots? Like we're in this downtrend. We have a new lower high here, and broke down below the 50. Momentum is declining. You are above zero, so we'll see what happens in terms of momentum. But right now, I'd like to see, a little bit of a reversal on that, and for entry points if you're going to get in. Dow Jones, the momentum is higher up off the zero line, but it's crossed down, and we have a lower high here as well. So there's been a bit of on Friday, there was a bit of a rebound at the 50, and we'd have to see if that sustains itself. It's a bit of a messy, choppy, volatile period, so it makes it trickier for trades because you don't always get those long, nice swing periods because you're getting all this choppiness. That's about it for the. Oh yeah, Canada has done pretty well. You can see we're above the zero line. We're in an uptrend here, and that's because Canada has a lot of oil and gas in the stock market and banks, and those have done pretty well, which I'll talk about in a second here. But I also look at ratio charts of the markets, and generally speaking, over time the Nasdaq beats everything, pretty much every other indice. But shorter term, there could be issues with the tech stocks, so we'll see what happens. But I'm not, I don't know how long that'll happen. These fake rotations have happened multiple times, but tech is always the one that outperforms over time. So we'll see how long it lasts, where the quote unquote value stocks or whatever, oil and gas, are doing better. So then what I do is I go to the I have a bunch of sector ETFs. So as I found ETFs that I liked and had good volume and stuff like that in different sectors, I put them into a list of my own. I didn't just use, so if you go to watch lists here in TC2000, you have ETFs, and that's all of the American ones or all the Canadian ones. You have all the stocks. But I like to create my own lists. So when you look at this, I've got a scan, which I'll talk about, but for strong sectors. And what you're seeing here is commodities. So RGA is a commodity index. Look at that nice big uptrend. Energy, big, huge thing, breakout. Coffee, which is a commodity. See, it's in a nice, beautiful uptrend. That's another commodity index. And then you have like metals. Well, you have, that's a little bit choppy, but let me, you have banks, regional banks as well as, those are nice, as well as the regular XLF. And then the metals, a little choppy here, but metals have been picking up. There's a possibility people are starting to talk about emerging markets and stuff. So you see here, huge downtrend, and you're starting to break out above the 50. So, and now it just so happens like at the breakout of the 50, you usually get to the zero line with the PPO, and then the moving average is a bit slower to get up there. But and then so you've got a range where it could get up to the 200. It might bounce off that and go down again. But you know, as well as looking for strong things, you could look at things that are have been down for a long period of time. I should probably talk about that as well. It makes the video a bit longer, but so you know, you've got oil and gas, commodities, metals, and then you've got some banks. Those are doing pretty well. A little bit of potential emerging markets. Nothing great in my opinion, but the Latin America one's starting to poke out a little bit. Okay, so that's probably mainly what I wanted to talk about. Now I'm going to show you what I do for a scan. So with a scan, you can put a combination of criteria to find stocks or ETFs that you like. Of course, when I'm talking about ETFs here, it's just to kind of find the strong sectors. The markets, and then look at the market, then look at the sectors that are strongest, and then you can find stocks within those sectors. So you don't just have to buy the ETF, but so one of the things I like is that it's above this green volatility stop. You can see that you get really good, usually uptrends when the green dots are there. It's not 100%, but that is one criteria. Also, price history, if you want to avoid really cheap stocks. Now, the PPO above zero, or the slope is greater than zero. I want to see an upward slope. So when it's sloping down, I don't want to buy like this, these downtrends. You could do that with moving averages too. It's similar, but that's just one thing I did. I actually used the MACD formula. I should change that. It's not quite the same as PPO. The price history above 50, this is, you know, an optional situation for you. But I noticed that a lot of things are really strong when the price history is above the 50. So you don't have to use that. So that gave me this criteria. Let me just check something else here. Yeah, I added price PPO is above zero as well. So when I was looking at stocks or ETFs that were doing really well, I noticed that a lot of, you know, usually it's above the zero line here, all this stuff. And you might miss some of the beginning of the breakout, but it's also avoided some problems that where it doesn't quite get up there. You know, it's a below zero, it looks like it's coming up, and then it doesn't make it. So, you know, you might miss some of the early parts of a reversal. Like here, when you're below and down, I avoid all this. Even this little pull up here, you hit zero, came back down. Finally, it gets up above zero, and that's right there. So when you look at stocks or ETFs, try to figure out what the charts look like when they're doing that breakout. So obviously you broke a downtrend, price percent offset across, you got up above 50, and then you get that big spike. So that's about it, I think. If you're looking at, oh yeah, I was going to talk about the negative ones. So what I do I went to I have a column I created. It's called 90-day performance. All I do is I edit and I just go the close. So these are little formulas. It's PCF, they're called in TC2000, personal formulas. But if I take the close and then the close dot 90 just means the close 90 days ago. So whatever that price difference was divided by the close. And that is not correct. Let me just check another one. I found an error there. I should have multiplied by 100 as a percent. So close minus close 30 days or close minus close 90 days, whatever you want to do, divided by the current close times 100. That gives you the percent. So then I sort it by negative, and so you've got the Bitcoin, Ethereum. If we look at Ethereum, what would you want to have happen before you bought? Well, you'd want this to be crossing up, but also to get up above zero. If you want to do just crossing, you go over here where this says price percent oscillator, and you say set an alert, and then what you do is you say crossing up the moving average. So when the price percent crosses the moving average, you could say set an alert. Or what I'm going to do is say crossing up a value of 0, and that's going to mean when it's up here. You could also say when it gets up above the 200 or when it gets up above the 50-day. But you can go through some of these really bad, like ARC and stuff. Like you can see how much, I'm just going to turn off the lines. You can see how much it's come down. It's quite low here. And you can see how low it is it's actually pretty close to where the lowest it's been in terms of the momentum. So you can decide what your criteria would be. But there's this little scroll area. If you see the mouse changes to a hand, I can go back and you can sort of try to figure out, like obviously hindsight's 2020. When you're way down here and you start to curl, you could think it's going to be, recovering, as opposed to here, but way down low. But if you wait till it gets up to 0, it just so happens, it's crossing the 50. And that could be an entry point. So if you're patient and you want to wait till it gets up to here, you're going to miss some of these gains. Also, if you look at when it created a new higher low here, that could be an entry point where you established some support at this point. So things like, I've put some alerts on things like the ARC, the crypto, the solar stuff, or no, not that one. Sorry, I got to scroll back down. Yeah, solar or like alternative energy. There's one in Canada, Q-Clean in Canada, and then you've got cannabis as well. See how it's just been killed. You don't want to bottom feed all the time, but there's, the tech and the growth that are really taking a hit, cloud computing, stuff like that. And in those cases, if you want to be patient, you could look at weekly candles. So if I go up here, I can change it to weekly, and I could look for a cross at the weekly point. So if I go back to ARC, it's getting closer to 200 on the weekly, and it's down here pretty low. So you see when it turned around, that's when it got up right there at the 0 line, beautiful entry point, crossed up. So you can use weekly charts as well, and that's more of a strong trend reversal rather than daily. iBuy is another one I noticed. That's the online retail. Huge up run since the March or whatever. Yeah, the March crash of 2020. But then there's been massive downtrend. So you can wait for those to turn around again on a weekly chart, cross up above as well. Maybe even wait till it gets to the 0 line and gets ideally, above the 50 and the 200 or above. Yeah, it's already above the 200. But so these are ones that you can look at. iClean is the one I was thinking of. So hope you like that. It's a bit of a long video, but don't forget you can get TC2000 free trial or $25 off in the link below. It helps out my channel. It's the only thing. It generates a little bit of commission. Doesn't cost you anything. And I just keep hoping that I can provide. I'm not telling you what to buy or what not to buy. It's mostly about learning how to do this for yourself and use TC2000. So hopefully that helps. Talk to you guys later.